Sige, sige, sige.
Let's build a better world for investing.
Let's lead in improving the quality and standards of the financial profession.
Keep you abreast of financial innovations here and abroad.
Be known for our integrity and professional excellence.
Let's always put investors' needs above our own.
Push for financial literacy.
Provide service to the investors through the selection of the best managed funds of the year.
Let's build trust in our industry.
Advocate on behalf of industry issues.
Convince trust and asset management companies to adopt the Asset Managers Code and the Global Investment Performance Standards.
Let's put ethics at the heart of everything we do.
Talk about ethical decision-making.
Encourage ethical behavior and be really passionate about it.
Create an environment where investors' interests can flourish.
Markets function at their best and economies grow.
For the ultimate benefit of the Philippine society.
I am Chris Arceo.
Mark Yu.
Erwin Ocampo Avante.
Rob Ramos.
Sandra Aurelio Gonzalez.
Mark Ilaw.
Kate Burgos and I am CFA Charter.
We
measure up. Join us.
Let's measure up.
CFA Institute is a global association of investment professionals that sets the standard for excellence in the industry. Since its foundation in 1947, CFA Institute has aggregated about 100,000 members and candidates in the fastest growing region, Asia Pacific. In response to extensive demands, CFA Institute has created the Asia Pacific Research Exchange, or ARX, an online research platform focused on investment management. Covering 18 major markets in the region, ARX provides content on over 20 investment subjects, including within the fields of knowledge application, academics, and regulation. Leveraging the extensive membership network and industry resources of CFA Institute, ARX is a sharing platform, feeding its users a great deal of first-hand industry news. ARX is also a learning platform, as a large number of high-quality research papers enable its users to stay abreast of all popular investment topics in the region. Beyond all that, ARX users can hear each other and find industry peers by publishing articles and research reports, making it a highly interactive platform. For more details, please visit www.arx.cfa. ARX is your preferred financial research platform for sharing, learning, and interacting.
All right. Hello, everyone. Pleasant afternoon to all of you. Thank you for being with us here today. And welcome to another Investor Series webinar hosted by CFA Society Philippines. Today, our topic will be about mutual funds. And my name is Mark Ilaw, Trustee and VP for Candidate Relations at CFA Society Philippines, and I'm your host for today's online event. Before we begin, we would like to take this opportunity to recognize our annual corporate sponsor, our platinum sponsor, Sea Oil Philippines Inc. Silver sponsors, BDO Capital, Coco Life Asset Management, and FTI Consulting Philippines Inc. And bronze sponsors, AP Securities Incorporated, DBP Daiwa Capital Markets Philippines, and Papa Securities Corporation. We'd also like to recognize our event partners, FMAP, MART, and Sharefield. To formally welcome us all, may we please have the President and Chairman of CFA Society Philippines, Dr. Robert Ramos, CFA, CAIA, CIPM. So Rob, good afternoon.
Good afternoon, Mark, and thank you for your time. It's always a pleasure to be here and introduce a very well-respected member of the investment industry. I would like to invite all of you to listen to this man. He is actually a founder. I would call him that. He's a founder, and he is a receptacle of knowledge. There are very, very few people who I would say shaped an industry, and this man is one of them. And I would like to thank him for his time and his contributions to the CFA Society as well, being one of our most trusted advisors. So with that, I'll leave the introductions to you, Mark, and thank you to our speaker, Mr. Fausto, for giving us his time and most importantly, imparting the knowledge. Thank you.
Thank you, Sir Rob. Indeed, this is a man who has been very influential to my career. So without further ado, joining us today to talk about mutual funds is the President and CIO of COL Investment Management, Inc. He is also the founding president of the Fund Managers Association of the Philippines, FMAP, and currently sits as board advisor of FMAP, CFA Society Philippines, and Asia Society Philippines. He is COL Financial Group's portfolio management expert and launched COL Fund Source, the country's first fund supermarket, making investing in mutual funds easy and convenient. He is currently the program director for the Fund Management Certificate Program under the Ateneo Graduate School Center for Continuing Education. He is the former Chief Investments Officer of BDO and has over 3 decades of experience in the fund management industry, having worked as head of investments of various financial institutions, where he was in charge of managing the largest trust funds in the country. He graduated from the Ateneo de Manila University with a Bachelor of Science degree in Management Engineering. He also completed the Behavioral Economics Executive Program of the Harvard Business School. He is a certified securities representative and a certified investment solicitor. Ladies and gentlemen, it is my pleasure to introduce Mr. Marvin Fausto. Sir, good afternoon.
Hi, good afternoon. Good afternoon, Mark. Thank you very much for that kind introduction. And thank you also, Dr. Rob Ramos, for inviting me and also for that kind introduction, those kind words. Thank you very much to you both. It's been my pleasure to be invited here in this prestigious organization. And I also like to welcome everyone to this. I think this is the last series for the year, for December also. Talking about mutual funds. As you know, mutual funds is very close to my heart. I've been an advocate of investing for everyone, most especially for the retail investors and the audience today. Because I believe that mutual funds is really the most efficient way to build wealth, more particularly for the retail investors. So allow me to share my screen to give you a presentation of the basics of mutual funds for those of you who are not yet very familiar. But allow me also to give you an idea of how mutual funds can really be an instrument that you can use throughout your financial journey, which is basically for your life goals. So let me now do my presentation on the mutual funds. So as I said, mutual funds is really the easiest way, a way to grow your money in very, very different ways, very multiple ways. But first, for those who are not very familiar, allow me to give you some basic principles of what a mutual fund is. So it's really like, it's a pooling of investments of different investors, more particularly retail investors, pull their money together in a fund. And that fund is now being managed by a professional fund manager. That fund manager now has the authority to invest in different investment outlets like stocks, bonds, money market. So it's an efficient way. Instead of the retail investors doing it themselves, they can now pull together the funds to a fund manager through a mutual fund, and the mutual fund can do all the research, the management, the compliance, and all the other needed requirements for making investing more efficient and more secure. And with the use of different compliance rules, that is globally best practice. So that is really a way to make investing easier for everyone. So funds are great. These funds are great because now, more particularly for the past 5 years, 10 years, it is now very convenient to buy mutual funds for retail investors to access for as low as even 500 pesos. And even in GCash, you can buy about as low as 50 pesos. And they are professionally managed and giving you the ability to tap industry experts, these fund managers, these more experienced investors that can help you manage your funds as well. And it provides you the facility to be exposed to different investment instruments like equities, money markets, bonds. So it allows you to access all of these products. Now, more recently, and I think this is also good news for everybody in the Philippines, more particularly, you can now access global investments through mutual funds, even in pesos. There's some funds now, you can buy global investments by using pesos, and the fund is already converted to dollars and they invest globally. You call that feeder funds. Mutual funds that are sold here feeds into another fund globally, and it is managed by global investors, experts around the world. So funds are now giving you access, not just locally, but also globally. On top of that, if you just invest in pesos, it will be converted in dollars. The exchange rate, if, for example, the peso weakens, is an added yield for the investors that want to diversify in different asset classes in the world. So there are basic types of mutual funds. You have the money market, bond funds, balance funds, and equity funds. 4 basic types. So this is generally the kinds of funds that are available here and also abroad. But there will be different variations of each of these, but they are generally just fall within these 4 types. So let me show you a short video of these types of funds through the help of our back room here. So let me show you the video.
Video will talk about the different types of mutual funds, where it is invested, and how it can be an effective investment for you. There are 4 types of mutual funds: money market funds, bond funds, equity funds, and balance funds. Money market funds. These funds are invested in special savings accounts like term deposits. It has a very low risk profile, so it is best for short-term needs. By investing in
Sir, can you unmute so we can hear the audio?
These funds
Okay,
are
thank you.
invested in corporate and government bonds. It has a low to moderate risk profile, so it's best for earning a stable return for the medium term of 1 to 5 years. Next is equity funds. These funds are invested in equities or stocks. It has a high risk profile and it is ideal to invest in if you want to get high returns for long-term investing. There are different kinds of equity funds. An equity index fund is a special kind of equity fund. This fund copies the performance of the top 30 companies in the Philippines, which are part of the PSEI or Philippine Stock Exchange Index. And finally, balance funds. These funds are invested in a combination of stocks and bonds. It has a medium risk profile and it is best for long-term investing, especially if you have a low risk tolerance and you don't want to put all your money in stocks. Now, here's a summary of the funds and their uses. Money market fund, bond fund, equity fund, and balance fund.
All right. Thank you for that. So let me look back again. Wait. So can you see me now? Can you see me? Okay.
Can you open your camera, sir?
Okay. Wait, let me do that.
We
Okay.
can see you
Right.
now, sir.
Okay, that's good. Okay. Thank you for that. Now, let's look at it how it can answer the goals that you have in your financial journey. Of course, all of us, we have our goals. We have our short-term goals, medium-term, and long-term goals. And let's see how mutual funds can really address some of these goals and to help you invest for the future. So, for what's best for your goals, like for example, now, let's look at the money market fund. A money market funds usually invested in short-term placements, savings accounts, deposits, and other short-term instruments. And it can be used for parking facility and to build your emergency fund. So as you know, you have to build your emergency fund just in case something happens, you lose your job, you get sick, you have something to get. So money market fund is a best instrument for that. And also for those who are waiting for a more opportune time to invest, let's say in equities, while you still wait for an opportunity when the market is going down, while you're waiting, you can put your money first in money market, and then you can easily liquidate it and then invest. Now, the returns are also good. It's better than savings banks, better than the savings interest that you get from the bank. For the past 3 years, the annual return is about 2.5% for money market. Now it's somewhere there also versus the bank savings deposit, which gives you only about 0.2%. Now, for other investment objectives, that is a little bit longer than just a short-term money market, you can consider the bond funds. So bond funds, as we have explained, are invested in corporate and government bonds, and it can be used for a particular objective that you still want to use for, let's say, more than 1 year or 1 to 5 years. And it can also be used to manage your risk when you invest in the stock market, because bond funds are less, what you say, volatile, or the returns are not as volatile as the stocks. So you can mix bonds, these bond funds, in your stock investments, so that your stocks can have a more, or your investments can have a more balanced exposure. Bond funds are your easy way to access interest-bearing instruments. If, for example, you do it yourself on your own without the use of a mutual fund, there are bonds that are available in the market, like the treasury note and some corporate bonds like Ayala Corp here, Ayala Land corporate bond. The 10 years treasury bond gives you about 6.7% gross, and then the Ayala Land gives you about 4.4% for the 2-year paper gross of tax. However, access to these investments are not that easy. You need at least 100,000. Or sometimes there are like retail treasury bond that's as low as 5,000, but it comes very, very rarely. You need about 100,000 or to about 1 million. Some financial institutions require you to have 1 million just to give you an access to these corporate bonds. But in bond funds, 1,000 to 5,000 minimum, and it gives you even a 3 to 5% annual return for the past 3 years. So it's also invested in these bonds, but it's done on a pooled basis. So it also gives you the benefit of investing in these treasury bonds or Ayala land bonds, but more diversified now because it is a fund. It invests in a lot of bonds, gives you diversification, and at the same time more stability, and then even liquidity. You can just terminate your investment. You can redeem your investments, and you don't have to sell the bond itself. You just sell your participation in the bond fund, and you can get your money. Now, if you are looking at invested in a combination of stocks and bonds for your medium-term goals, you can also use these balance funds. More balanced in approach. As I mentioned earlier, it's a combination of stocks and bonds. It is like investing also for the long term, but you have bonds also as a mix. The other one is really, the last one is the equity funds, which is my favorite because it can really be used for long term, for your long-term goals, which is more than 5 years. They are basically invested in equities or stocks in the Philippine stock market, or some other global equity funds also can be accessed. These are still also equity funds. So, and there's a particular type of equity fund that I like, which is the equity index fund. So, you know, equity index fund is your best type, or what I believe is the most efficient and good performing funds in the market over the long term. So you have these equity index funds. And just give you an idea of what these are. So an equity index fund is like it's also an equity fund, but it is particularly invested in the top 30 companies of the Philippine Stock Exchange Index. It mirrors what you hear or what you read in the newspaper, what you read online about where the market is, where the PSEI is. It's basically composed of this 30 largest and most valuable and highly traded stocks in the country. So if you invest in the equity index funds, you practically invest in the growth of the country. You have companies like SM, Ayala, BPI, BDO, Ayala Land, Mondenizen, Aboitiz. So you have these household names that are already in the fund. You don't have to choose anymore. Sino ba yung the biggest corporations in the country? It is already in the index. It is already in the fund. And the rule of that index fund is it just follows the weightings of each of these corporate stocks, and it just, you don't have to choose when to buy, when to sell each of these stocks, but all you have to do is just buy the fund and you ride in the growth of all of these companies. So that's the beauty of that. See the performance, if you look at the yearly performance from 2001 to 2021, it's about 20 years, yield of about 9.6% per annum on average. That already includes the pandemic in 2020 and 2021. So it still had a very decent return. And studies have shown to among you CFAs, you know that on average, majority of the actively managed, those that are non-index equity funds, that actively managed funds, they underperform the index on average over the long term. So it has been proven here and in abroad that equity index funds outperform the actively managed funds. So for you want to invest for the long term and you just want to focus on what you do, like if you're in your career and you just want to invest for the long term, just investing small amounts, just putting aside small amounts through your savings, just put it in an equity index fund, do it regularly and do it over the long term. You will be able to participate in the growth of the country. You will be able to save and invest and get the returns that the stock market can provide. So in summary, you have 4 types. You have the money market for your short-term investments that will give you higher return than the bank deposits. And then you have your medium-term investments, 1 to 5 years, which is the bond fund. You can use your bond fund for any of those short or medium-term goals. You can also, for your longer-term goals, are your balance funds, which has moderate risk. And now for your equity funds, for your long-term investments, which has a bit of higher risk, but also higher return. So more particularly equity funds or equity index funds. Okay, well, how does it look naman in terms of the return profile, risk return profile of these mutual funds? I'll show you here an estimate of for the period 2005 to 2021, how they have moved in terms of performance. As you can see, this the maximum return of each of these funds, like money market, had a very maximum for that period, 2005 to 2021, had the highest return in 1 year of 5.3, 20% for bond funds, 52% for balance funds, and 74.8% in equity funds, just in 1 year, the maximum positive return. So it can really give you higher return. However, there are also negative years because markets are volatile. So there are negative yields. But unlike the other funds, money market fund did not have a negative yield. So they're mostly positive. The bonds, they also have some negative yields, like just in 1 year. The worst that it had is about negative 5.7. It is also a little bit volatile. The balance fund and the equity funds, understandably, are more volatile. They had negative year, maximum negative year is 27.6, and an equity fund had a negative of 44.7%. So that is why we recommend that for your short-term investments, that the things that you need over the short term, just put it in the money market. So you don't get this volatility and negative returns when you need it. However, for your long-term investments, you can consider the bonds, balance, and equity index funds. Okay. Using your mutual funds for your financial, for your different financial buckets, I have for your liquid cash, that's your liquid bucket. That's your money market funds. You can also use your bank products or some e-wallets. For your imminent goals, the bond funds, and for your future lifestyle support, your retirement, long-term investments, you can use the equity funds or balance funds. So these are the buckets that I suggest you look at. And in terms of asset allocation, you can probably allocate some of these funds, like 30% of your funds, put it in short term, another 30% in your bonds, and 40% on equity funds, depending on your needs, depending on your objectives. These are just an idea, give us an idea, more or less a 60-40 asset allocation of fixed income and equities. Okay, let's look at an example. Let's look at Jesse. Jesse's goal is to come up with a travel fund, maybe 35,000 travel fund. Yes, she has money in the bank now. She wants to invest it maybe to travel in the next couple of years. And she's looking maybe like going to probably Japan, or I don't know, maybe Hong Kong, or even local travel. They just put aside about 35,000, but she will still need it in the next 2 years. So a good investment is really bond fund. Now, because it is less risky compared to stocks and provides a stable return, but higher than banks. Now, she has another goal, is to earn better returns on her emergency fund. She just set aside 20,000, for example, in a bank. Instead of just leaving it in a bank, earning very low return, she can put it in a money market fund, an emergency fund that she can take out anytime, but gives you better return. So she has her goals to travel and an emergency fund, how much, and how long. She can invest in these different buckets, and where to invest it. So really depends on your objective. Travel money, 2 years, bond fund. Emergency fund, very immediate, money market. Let's look at Mark, another example. For example, he has a goal of he's getting married maybe in the next 2 years. But also before he gets married, of course, you have to put aside a certain amount for emergency. Maybe 500,000 as a goal. You want to grow a wedding fund and a 500 and maybe 250,000 on the wedding day that you would need, or a few weeks before the wedding, and you need another 250,000 to pay for deposits for your photographer, for videographer, for the venue, for the church. You have to put the down payment you need immediately. So you're actually looking at about 500,000. So the way you can probably invest and earn a little bit more right now, or putting aside an amount, you can put 250,000 in the money market and then 250,000 in the bond fund. So that's how you can allocate this objective, this strategy. And then you can probably have another goal. If after the wedding, you want to build a family, have a kid, probably looking at the education of your child, future child, to be used college education, probably in 18 years. I don't know, 16, 17, 18 years. The reason why 18 years, maybe you get married, and then probably 2 years or 3 years before you have a kid. And then you estimate amount of, let's say, $1 million for college education. You have about 50,000 ready, and then you look at want to save up for it, about 5,000 a month that you will need 18 years from now. There's an equity fund or equity index fund is the ideal strategy for you. So that college fund is long-term in approach. It can ride the volatility, the market. You don't need it right away. And you can do regular investing, like 5,000 every month, and then to compound and to reach your goal for that purpose. So those two goals of Mark, you have a wedding money of like 500,000 that you need for 2 years. You can invest half in a money market fund and then half in a bond fund, so that you can have a better strategy for your future. Now, for the college fund of the future kid of Mark, you can set aside maybe 50,000 now and then add 5,000 a month for the next 18 years. Make it automatic. You call it the easy investment program or easy investment plan. There is such a program online now in COL. We have that. You can do that for a few years, and then you can invest it in an equity fund or an equity index fund and do it regularly. Another example, Philip, he wants to grow his retirement fund. So he intends to use the money, and maybe after 20 years, he wants to set aside the retirement fund. He wants to grow his money. And as you know, SSS is not very is not sufficient, and maybe is a corporate retirement is also maybe not as sufficient for your lifestyle that you want to you want to complement that with your own investing, with your own goals of setting up your own retirement fund to complement SSS and also the retirement fund of your corporation, the corporation where you work for. But if you're a businessman, you might want to set up your retirement fund on your own as well. So here is an example. Philip wants to set aside and build his retirement after 20 years. And maybe he can start with 100,000 in the money that he has now and put 5,000 a month. And then for the next 20 years, he can build up, invest in an equity fund and equity index funds, and can accumulate more than $1 million after 20 years. So basically, these different examples that I showed, Jesse, Mark, and Philip, there's a different types of combination that's actually right for you. You might want to look at your goals or what you intend to do, how you see yourself in the future, what do you want to prepare for. I believe that investing is really just putting aside money now that you can use in the future, hopefully giving you better return in the most efficient way, in the most in the smartest way. So mutual funds can help you do that. Okay, we have I'm placing here some particular funds that you might want to consider as a starting list. As you know, we in COL Financial, we have a lot of these funds in our platform. We were able to put together a lot of funds, and you might want to consider what money market, what bond fund, what equity fund should I invest in? Now that I know that what my future, my projections, my future, and what my objectives are, where should I put my money? So my suggestion, if you ask me, a money market fund that's good in the market now, you have the Sun Life Prosperity Peso Starter Fund. Is the largest money market fund in the industry now. It's very good return, very stable. You can invest in there for your money market objectives or for your short-term investing. For bond funds, my suggestion is an ALFM Peso Bond Fund. They are also the largest bond fund in the country, mutual fund, and it's also very stable return, giving you very decent yields right now. For a balanced fund, I'd like you to consider to diversify globally. ALFM Global Multi-Asset Income Fund. That's a very interesting fund because you invest in pesos, but invest globally, both bonds and stocks. Bahala na sila. And it is invested by BlackRock. It feeds into BlackRock. As you know, BlackRock is the largest fund manager in the world. So what best way for you to do is to buy this fund, feed this fund in pesos, and it feeds into the global multi-asset investment strategy of the largest fund manager in the world that invests globally. So, and what's more, it provides dividends on a monthly basis. Now it gives about 4%, very good return on a monthly basis. Now, for your index funds, for your equity funds, my suggestion, of course, I am I am marketing as well. I'm the president of COL Equity Index Fund, and I consider that's basically my suggestion because it's the difference with all other index funds. It's that there's no holding period. You can sell it anytime without any pre-termination charge, and you can start with only 500 pesos, very small minimum, and it tracks the index. It's just most efficient way to buy the market, the local market, the COL Equity Index Fund, and it's available in the COL platform. And the last index fund, my suggestion to look at is the Sun Life World Equity Index Fund. So they invest in the world as well, like the BlackRock. And this Sun Life now is also in pesos. And then you can invest in the global equity index fund. Parang the COL equity index fund is the local index fund. It follows the market. Whatever the market does goes up and down. It goes with it. The Sun Life World Equity Index Fund follows the world. They call it the all it's a global index that it follows. So basically what's happening in the world, the largest companies in the world are invested, they invest in. So it also feeds in a fund like that. So these are your different types of funds that you might want to look at. You can also check it out in Google. You can check out these funds and you can look at it, you can study it when you have the time. Okay, so how to pick funds based on your goals, 3 easy steps. Determine your investment buckets, whether it's short-term, medium-term, long-term, and then choose a fund for each of those buckets and diversify your portfolio and create a combination. 3, create a combination of these funds and do a diversified portfolio here and even the world. So that's really a benefit to the retail investor. It's easily accessible for you. Now, plugging as well, shameless plugging. COL, I work for COL, so we're the first fund supermarket in the country. We've been here for 23 years. We started the fund supermarket in 2015 with Mark Ilaw here. We not only have stocks. You can not only buy stocks in the platform. You can also buy funds. We have more than 500,000. We have 500,000 investor clients. We are a listed company in the Philippine Stock Exchange and with customer assets of over 111 billion. And in the platform of the mutual funds, we have more than 50 funds now in the platform. A fund supermarket. Any fund that you need, we already have it here. So I have from Atram, Sun Life, Phil Equity, First Metro, Manulife. CMI is the COL Investment Management, the newest member of this group. And then the ALFM mutual funds of BPI. Now in CMI, just to let you know that COL now is a professional fund manager as well, and we offer also different mutual funds, more particularly at COL Equity Index Fund as well. So you can start as low as 500 at the start, an additional of 100 pesos. You get easy and convenient access to most of the stocks in the established stocks in the index and no lockup period, no early redemption fees. Okay, so you can invest mutual funds in COL. Just sign up if you don't have yet at signup.colfinancial.com. And if you don't have an account yet, you can easy read these steps as well. And go to our website and you can buy it through there. You can learn to invest in mutual funds. So for investing guidance, you can follow us, CFA Financial. I open my floor now to questions if there are any about mutual funds. Thank you.
Thank you very much, Sir Marvin. So one of the things that I took note from the talk is that there are different mutual funds that will allow you to address different goals. And for the longest time, kasi maybe people are looking at mutual funds boring. But in reality, you have these different types. There's a lot of different variations. And now you can even access global investments. So as you said at the top of the presentation, sir, this is one of the, if not the most efficient way to actually grow your money. So we have a couple of questions already from our audience. Feel free to continue typing in your questions. So first question is from Monzen, one of our most active CFA members. Per your experience, how similar or different are the underlying investments or funds of global mutual funds? Do they tend to pick the same underlying funds or are there standouts? Sir?
So the question is, how similar are the, correct me if I'm wrong, Mark, no, the question is, how similar are the funds here versus the funds abroad? Is it that
Actually,
that's
yeah, the way I understand it's more of how similar or different are the underlying investments of global funds.
yeah. So the global funds are similar, very similar in the underlying investments. They also, if it's a money market fund, it's also invest in short-term placements. It's a bond funds, you also invest in bonds, in stock funds or equity funds, you also invest in global equities. Index, it also invests in global index stocks that are part of the index. So it's very, very similar. The thing that we have to look at is on when you invest in global funds is that you look at the fact sheet or the information about that fund. Some of the funds are invested differently. Some are thematic, meaning just healthcare, or some are technology, some are country funds like China fund or US fund. So there are different types. But in terms of underlying particular securities, they're very, very similar. Bonds and stocks predominantly.
Yeah, and I think he added also, sir, that he's referring to, I guess, the target funds, the likes of BlackRock, Wellington, Fidelity. So I think that's another clear difference. You know, while in general, the underlying securities are the same, the fund managers, the target fund managers, that's also where these funds can differ. So the
That's
ones
right.
that you can access here in the Philippines, I understand, it's a rarity that you'll find similarities in terms of target fund. So usually one fund manager would have a different target fund from the other. Sir, he has another question naman on liquidity. How do you find liquidity among mutual funds? Are they easy to get in and out, or are there certain funds that are more difficult to get in and out of?
In terms of difficulty in the subscription is very easy. On the day that you subscribe, you can come in. Whether it is a local fund or a global fund, all you need to do is subscribe, put in money, of course, and then you can just subscribe in right away. Now, the redemption, which is when you want to get out, that difference, that is different for each particular fund. For short-term money market fund, some you can just get it on the next day or on the next 2 to 3 days. Some 7 days, but some have pre-termination charges, some don't. But the other funds, usually 3 to 5 days for your bond funds, for your equity fund, the equity index fund. Now, the difference is in the global funds. Some global funds take a bit longer because aside from the process that you have to go locally, there is a process that you have to go globally. And then they have to pass through different channels and conversion from dollar to peso. So it takes a while. Some of them takes about 8, 9, 10 days. So, but it doesn't take longer than that. It's relatively liquid as far as the investment comes. It's not like real estate. You cannot liquidate it just like that. Okay, thank you.
So in other words, sir, there's just a processing time. But I think the other aspect, sir, to it is, can you also talk about the ability of investors to easily buy and sell mutual funds? Because if we compare it, let's say, to stocks, you should have a counterpart, right, sir? If you want to buy, there has to be somebody who's going to sell it from you, vice versa. What about in mutual funds?
Yeah. Good question on that, Mark. You know, if for example, you compare it in stocks, some stocks might not be easy to sell, right? Because there's no liquidity, there's no seller. But on mutual funds, there's always a seller. You can they can terminate it anytime. What you need to do is just to redeem, and the fund manager will just sell an underlying investment and then give you the proceeds right away. So and also it doesn't have a minimum or a maximum amount. You can put 100 million, you can put 10 million, you can put 500 pesos, or you also terminate 500 pesos, 1 million, 100 million. It doesn't matter. You can get your money right away, depending on how long the process takes, depending on the fund.
All right, so that's very clear. There's no hindrance to the ability of an investor to actually buy or sell mutual funds anytime. You just have to wait for the processing days of the fund houses. Sir, there's another question here. How much is the minimum investment for mutual funds in COL Financial?
Yeah, I said 500 pesos. Okay na, pwede na yan.
So as low as 500. So no more excuse not to actually start investing. Yung
Yeah.
biruan nga, sir, di ba? If you can buy a cup of coffee regularly, then you should have the budget to be able to invest, right?
That's right.
So, yeah, so we have another question here from Monsen again. Is the new fund effect real? Do new funds really tend to outperform the mutual fund market during their first year? So I guess, sir, this might be relevant to your product as well, since you launched it just a couple of weeks back.
Oh yeah. New fund effect. It's not well, it really depends. It's not really true. Your question is, do new funds really tend to outperform? No, it doesn't work that way. It really depends on the fund manager. If it's an actively managed fund, how he best times and chooses the investment, and also the timing of the launch. It is not like that. So there's no new fund effect. But I guess it is like a marketing gimmick also, I guess. So for other fund houses, they make it appear that it looks there's a new fund effect, but in reality, there's none.
All right. So, sir, there's another question from Hazel. How much is the annual interest rate for mutual funds? So I guess she's asking about the returns. I believe one of the slides we showed it, sir. Can you refresh her memory lang, sir?
Yeah. If you're talking about the interest rate, it's not really an interest rate, di ba, Mark? It's more of a yield or a return.
Yep.
If for the past 3 years, the money market fund gave you about 2.6%. Net, and then on the equity funds for the past 20 years, an average of 9.6% return. Very volatile, but on average, gives you close to 10% on average.
Yeah, and I think, sir, one important thing that they have to take note of, yung returns sa mutual funds are never guaranteed. So these are historical returns, so it can always change going forward. Do you have other questions from the audience? Okay. What is the future of digital asset mutual funds? Crypto MFs, NFT MFs perhaps? Or how about alternative asset mutual funds beside REIT funds? Anything that you're seeing on the horizon, sir?
What is the future of digital asset mutual funds? Here in the Philippines, very little. It's not yet in the horizon. Because first of all, mutual funds, cryptos or NFTs are not regulated. It is not yet an allowed investment outlet of mutual funds now, and for here, so it's not yet that available. Or the second question is, how about alternative asset mutual besides REIT funds? Alternative asset mutual funds, maybe she is referring to thematics or more
commodities or
commodities.
derivatives. Are we
There
seeing
are. There are. Like for example, in COL, we have a healthcare fund. We have whether China or India. There are some that's coming out, but slowly, because the country is still trying to. I mean, the retail investors just getting to know these funds. So we're slowly bringing out these funds for the benefit of the investors.
Yeah, all right. I guess in the interest of time, sir, just one last question. What's your best piece of advice for investors, especially given today's, shall we say, challenging market environment?
Yeah. So piece of advice for investors. I think you have to put in mind the goals that you have, and in terms of your future objectives. Investing is really for a specific objective, and the reason why you do that is so that you can plan your future better. And when you do that, you are able to control your financial future by accessing different investment products, more particularly mutual funds, and you can manage it in terms of this allocation depending on your goals. You cannot control what the market does, but what you can control is the allocation that you make, the risk that you take. So I think what my suggestion is for all of you to focus on what you're good at, what you're doing, your careers, your passion in life, and then, but do not forget to put aside a certain amount for investing for that in your future. Put aside an amount and do it on a regular basis. In fact, do it automatically. The savings rate is very important for all of you. The rate, the 20% of your revenues going up to 50% as you increase your salaries, increase your investment, and put that aside regularly on a monthly basis in a diversified portfolio depending on your goals. So we have already provided you, and I'll take this opportunity to thank Mark also, because he was the one who helped me launch this fund supermarket way back in 2015, and it is now available to all of you. And we're adding more. We're adding more funds to give you more opportunities. And just recently, we opened up the world, allowing it to invest also, not just in the Philippines, but also the world. So you will not have an excuse already to take control of yourself, to take control of your future. So just focus on what you do, and then don't forget to put aside to invest, and invest for the future and for yourself. Thank you.
So great, sir. So focus on the things that you can control, focus on your goals, and make investing a habit. So thank you very much, Sir Marvin, for all the knowledge and wisdom that you have imparted to our attendees. Always a pleasure listening to somebody who has been well seasoned and practically an institution in the industry. So thank you so much, sir. So to all our participants, kindly turn your attention to the screen for the QR code of our online evaluation. Please take time to answer the survey. It will only take you 1 to 2 minutes to complete. And last but not the least, let's kindly turn on our videos for the photo opportunity with our guest speaker, Sir Marvin, for today. Can we kindly ask everybody to turn on their cameras? All right, so nice to see everybody's faces. So hopefully next time, this will be a face-to-face event. Okay, let's give other people a few more seconds to open their cameras. Huwag na kayong mahiya, guys. Minsan lang tong picture with Sir Marvin. Sulitin nyo na. Yan. So thanks for opening your camera, Kim. All right. How about the others? I guess nahiya sila, Precious. So we can take the first shot. And
Sige po.
please, yung mga iba na can still open their camera, kindly do so. Okay?
Sige po. Okay. 1, 2, 3. One more po. 1, 2, 3. Thank you.
All right. Thank you. Thank you, Precious. And again, thank you everyone for joining our investment series session this afternoon. Again, CFA Society Philippines would like to thank our sponsors. First, our platinum sponsor, Sea Oil Philippines. Silver sponsors, BDO Capital, Coco Life Asset Management, and FTI Consulting Philippines. Our bronze sponsors, AP Securities Incorporated, DPP Daiwa Capital Markets Philippines, and Papa Securities Corporation. And last but not the least, our event partners, FMAP, MART, and Sharefield. That concludes our webinar this afternoon. Once again, thank you, Sir Marvin, and thank you to all the participants. We hope to see you again on our next sessions. Take care,
Bye.
everyone. Bye, guys. Sir, thank you. I'll go ahead na, sir.